اوكي. اولا شكرا للانتظار، بس انا عارف ان انتم مستنيين عشان الغداء مش عشاني، فمعلش. اولا انا مدرسه قديمه، فما عنديش برزنتيشن بقى وباوربوينت والكلام ده، لان لو جبته هتكعبل فيه ومش هعرف اعمل حاجه، فبحب اتكلم كده تلقائي. I think I might have to speak in English. Not sure. Yeah, doctor. Arabic or English? طيب. الموضوع اللي حابب اتكلم فيه هو بالانجليزي العنوان بتاعه Unlocking Value. Unlocking Value بمعنى في قيمة رأسمالية محبوسة ملهاش أثر مباشر أو فوري، محتاجين نشوف طريقة نستفيد منها. من هنا جاء الكلام على موضوع sale and lease back. Sale and lease back essentially exactly what it says. There is an asset, typically a real estate asset, sizable one, that is owned by a company. Could be a bank, could be construction company, any type of corporate building or retail or office building or whatever. It is owned outright. Now, any company is always looking for growth and ways to finance this growth. In terms of funding sources in any market, particularly in Egypt, you are principally looking at two main sources: the debt market, i.e. borrowing money from a bank, or from the capital market through bond issues and such like. And the second source is equity, generating or issuing shares for equity, but that of course we know is expensive because it means giving up part of the ownership. Now, what we're saying here in Egypt, we are even more restricted because we do not really have a bond market. So corporates have only to go to the bank. They have no other source, either increase their capital or go to the bank. Banks here are liquid, yes, but they are expensive because we are living in a very high interest rate environment. So by default, it is expensive. The current lending rate now is around 16.5%, which is almost prohibitive in many cases. And then you have all sorts of restrictions, financial covenants, ratios, and what have you, imposed on you, either by the central bank or by the bank themselves, or in some cases both. And these restrictions are probably more painfully felt in the real estate development market. Banks do not lend developers. Banks will lend against real estate when it is finished and delivered, which somehow defeats the purpose. So we're looking at, what I'm trying to suggest here is another form of finance, another source of funding, a little bit outside the box in Egypt, not worldwide. And that essentially is the sale and lease back. What does that mean? It means basically that if you are a company, you have, for example, a very prestigious head office that you are occupying and you own, and you need to raise capital. Let's say you have reached your lending limit with the banks, the legal lending limit, single obligor limit. So even though your credit is excellent, you cannot borrow more money from the bank. And like I said earlier, there is no bond market, corporate bond market in Egypt, so you cannot go to the capital market. So your option is either to increase your capital, which means give up equity, and normally shareholders or main shareholders do not particularly like to do that. Or, as we're suggesting now, you have another option, which is the sale and the leaseback. What does that mean? It means I will sell my iconic headquarters, my prestigious headquarters, I will sell it typically to an institutional investor, and at the same time I am contracting to lease it back, to rent it back for my use, so I do not discontinue my use, I do not leave the premises, nothing changes at all except the title, and I will enter into a lease arrangement with the buyer for 10 years, 20 years, 50 years, even longer as the case may be, and I will pay rent, which essentially means I am borrowing that money and I'm paying interest in the form of rent, typically lower than the bank rate. Now, what are the advantages of doing that? Well, first of all, it gives you a new source of funding. Secondly, it removes from you the restrictions of debt equity ratios. It removes the restrictions of ability to borrow from the bank, and also it is an off-balance sheet item in most accounting systems. So it does not count as part of your debt. You are actually paying rent as you do anyway. And in many cases, there are tax advantages to such arrangements. And at the same time, you have raised a substantial amount of cash by releasing the value of that property while you're still using it. Now, the other point is, of course, you will have access in this case to longer term funding, because you could enter into an arrangement where you have a lease for 10, 15 or even longer years. And the way it works, you may have in some cases the option at the end of the lease, whatever that is, to buy back the asset. That is also a possibility. Now, why I'm saying this should be something we need to look at in Egypt, because it's a new source of finance. It is also a very attractive investment instrument for institutional investors, insurance companies, pension funds, and such like, because they will be looking at a relatively good return for a long period of time. You might say, well, you can buy a bank CD today for 16, 17, 18% even. Yes, but for how long? I think it's only up to 3 years or even less. Here I'm talking about a good return, depending on the market, for 10, 15, 20 years, and this is the sort of continuous, sustainable return that certain type of institutional investors are typically looking for. Like I said, pension, insurance, private pension funds, post office investment portfolio, they are looking for stable return. And when you are in such a situation, there is practically minimal risk, because as an owner of such an asset, you are generally of very high credit standing. So the risk for you as the new buyer who is renting it out, collecting the rent, is quite minimal. And in many cases, this is considered a AAA type of risk. Now, to give you an example how useful and important this market has become, the landmark deal which changed the complexion of this instrument happened in 2007. HSBC, the bank, sold their global headquarters in Canary Wharf in London for 1.1 billion English pounds. They raised 1.1 billion pounds by selling their headquarters, and they entered at the same time into a very long-term lease. So they raised the cash, they increased their capital efficiency ratios, and they still have the building exactly as it is, paying the lease payments, which were significantly less than if they had borrowed the money from the bank. For the investor who bought this, it was a Spanish real estate investment group, In fact, it was actually advised by Collier. They have secured an iconic asset and a sustainable, long-term, steady income with a AAA tenant. So everybody wins. Now, why I think this is important for us in Egypt? Because I think many companies, banks included, are sitting on hundreds of millions, if not billions, of assets. A lot of it is corporate headquarters that are exactly what I'm saying, hidden value. This value can be unlocked, can be released through the sale and leaseback, and that money can then be put to use to fund further activities and further projects. And you always have to work on the assumption that if I am going to borrow from the bank at 16-17%, then it goes without saying that I'm going to use that money to generate income or revenue significantly more than the interest I'm paying. Otherwise, you wouldn't borrow in the first place. So by doing that, I'm even securing funding at an even cheaper rate than I would from the bank, without the restrictions that will be imposed on me by the bank in terms of ratios, in terms of mortgages and such like. Now, there is growing talk at the moment about real estate investment funds. We know that several people have already applied for permits and they will get it. And I think real estate funds will be a major component of the market in the years to come. It is coming quite late in the day, but like we say, better late than never. The laws regulating real estate investment funds have a number of deficiencies, but it's a start. Now, what is the relation between real estate investment funds and the sale and leaseback I'm talking about? If we look at the market globally, we will find that one of the main players, the main investors in sale and leaseback transactions are in fact real estate investment funds. It provides them with the perfect allocation of the asset class that is secure, that gives them title to the real estate asset, and gives them a sustainable, stable, decent return over a long period of time. Now, what I suspect is once we start having real estate investment funds here, especially with the restrictions that are imposed on them by the current regulation, investing in sale and leaseback situations, I think, will become a very attractive and a very important component of their portfolio. I believe we will start seeing more and more sale and leaseback transactions in Egypt, structured the way they should be structured to fulfill the objective, which is raising long-term funding, at the same time offering the buyer or the investor, on the other hand, a decent and stable return over a longer period of time. Like I said, it's a fairly simple concept. The owner sells, at the same time he rents, so the owner becomes the tenant and the buyer becomes the landlord. This is very simply how it works. What the lease payments are, what the terms are, these are all obviously negotiated between the two parties, but generally, like I said earlier, the main premise is that the lease payments will represent a certain saving to the borrower in this case than the bank. This is a key element that we always need to keep in mind, given the nature of the credit and given the long-term nature of the underlying arrangement. I think this really sort of sums up what I mean about the sale and leaseback as a new source of finance and as a way of unlocking the billions of hidden value that is all around us. Thank you very much. Any questions?
Again, the interest rate for the lease option to buy or the lease back, however, it reached not only to 16%, it goes almost to 21% today. To the point it's discouraged a lot of people. So this is one thing. So what would you recommend? There's a lot of people saying we're not going to take this option to banks. Yes, banks has a lot of liquidity because the return on investment is very hard to reach them. The other thing is because we don't have a secondary market and we don't have a bond, the interest rate is not a fixed rate. So it's varies depending on what's going on in the market. Again, as you very much said, so interest rate goes up to 20% as for the time deposit, CD and so on. So what would you do?
Okay, you have to look at the sale and lease back in one aspect as two separate transactions. So you're selling the asset, market value thereabouts, and then you have another separate contract, which is a lease contract. As if you are not the owner, you did not sell it, you are a tenant, you want to rent this space. So you start negotiating your rent, your lease payments. Now, the two transactions effectively make up the instrument. So they are somehow linked in the sense that I'm not going to pay rent that is higher than the bank, and you as a buyer that is renting out the asset, you want a return that is reasonable compared to what's available in the market. So you need to be somewhere in between. Now, this being a long-term lease, there are provisions which again negotiable for increases. So you do not enter into a 15-20 year lease at the same amount fixed for the 20-year period. Typically there will be inflation adjustment, periodical review, there will be room for increase. Now, for the investor, how long you're a banker, so how long do you think a 20% lending rate environment is going to last, or 18% deposit rate? Not for long, exactly. So if I am entering into such a lease arrangement and I'm going to give you lease payments equivalent to say 12% return, 13% return over such a long period, it is attractive for you. And for me, obviously.
For a bank, I can give it to you, but not for the first 3 years. And the first 3 years is typically hard for any company to start, because in the beginning, to get the revenue, it will take a long time to do that.
Exactly.
So the company has to adjust, and knowing that not necessarily that they will make money in the beginning, and this is one of the technicalities.
True, and also don't forget one of the main advantages of, for example, going to Bank Auda is it is not a credit, so I don't need to go through the hell that you're going to put me through. Show me your cash flow, show me a business plan, what are you going to do, expenses, blah blah blah. No, this is a building, I am renting. My credit as a tenant is very good. I'm going to pay the rent and that's it. I don't have to go through the process of the credit committee and the risk committee and all that, plus the requirements that the bank will rightfully ask for that maybe I don't have or don't want to give.
The other thing is, as you well said, there was a trend that they will go even the Islamic finance, which they went with the Ijara, and Ijara is,
essentially.
That same
Yes.
thing. And there is the law of 95 or 1995, which allowed the Islam, that is not really effective. Some of the problem is, even though it's off the balance sheet of the company, but still within the balance sheet of the bank. So as a bank, you cannot have so many equities within that. So these are one of the things. The other thing is so if you lease it, and we've been through this with Toyo, if you lease it, there is not a strong law that I can even reach you if you decide not to pay back. Because once you are in the, once you reside there, it will take years to get back. And this is the other problem that banks is facing.
Yes, it is a point. I think it's a minor point in the context of the scale we're talking about, and in the sense of the caliber of the tenants in this case, and also we're not necessarily talking about banks buying these assets at all, actually.
True, because if banks is buying these assets,
No.
it is hard. However, companies buying these assets will, maybe they are not under restriction of the CDE, however, they will have the same problem of the Qiyasa, which is the Egyptian law. The other thing, after the devaluation of the pound compared to the dollar, you see a lot of prestigious malls that some of the tenants already left or not able to pay the rent, and the owner of the mall had to decrease the rent in order for them to sustain the business and not turn into a ghost place. How would you see this as buying things back if this happens? Because I will depend on an income of say 12%, 13% for a long time. However, maybe I have problem with retail.
True. You're absolutely right on this point, and this is why I do not think the sale and leaseback will kick off here in this market with retail and such like. It is still nascent. It is still a young asset class, relatively speaking, in Egypt. It is still maturing, and of course we have fluctuations that are not typical of the commercial cycle, like the currency valuation. I mean, one of the largest sale and leaseback deals done in Europe was Tesco. But that's different. We don't have a Tesco as such here. So I'm thinking, I see this instrument being used mainly on office buildings. Seriously, I mean, we have a number of office buildings in the smart village that were built. I think it was an ego trip more than anything, quite honestly. Number of investment banks, finance companies, even banks, etc. They build this huge, amazing office building that they use. Now, I am positing that you don't need to actually own it. It will still say Bank Auda, it will say Naim or whoever. Nothing will change. You don't actually have to own it. So I think this is probably where I will start. And I'm sure we'll find many investors who will be happy to buy this asset and lease it back to a very credible tenant and get the sort of mid-teen, low-teen returns I'm talking about for a long period of time.
So your recommendation, if I understand correctly, so we'll start with office building because of the retailer it's still risky with the valuation of the...
I think so. We can start with Bank Auda, yani.
We already leasing from Sanfir, but why not?
Buy one and then we'll do it for you. Yeah.
No, I totally agree with you. In some way, there is a lot of banks now opening a leasing company. CIB is one, Said is one, and so many other companies. And the way they do it is to sell it and lease it back for themselves, and they are making money. So again, unfortunately, it's been done through the same pocket.
Yes, but there is a little bit of difference here, man, because the leasing companies, they basically are lenders, and they get funded typically from the banks, and then they lend you against your asset. What I'm saying here is an investment grade instrument. Structure it and then place it as an investment instrument with investors, institutional investors mainly.
So basically this is a new trend that we should start and we would recommend for a financial company to get the money and to do so, not replacing a bank, but
Yes, I don't think we. Yeah, but I don't think we need to create a new company to do that. I think what we need is the structure of the transaction, to put it together and then place it with the investors. You don't need one company to do that.
Yeah. Even the leasing company are not one company.
Yes, exactly.
Combined together. This is what one company.
Yeah.
How about the taxation? Did you tell us if there is tax benefit?
As far as I know, there is certain tax benefits. I'm not a tax expert, so I cannot elaborate too much on that, but there certainly is tax benefit on that. I mean, for starters, you're paying rent, so that is obviously deductible from the expenses. What I do not know for sure yet is if you do sell the asset, presumably there's going to be a capital gain, so I don't know how that works. Yeah.
Thank you so much, and knowing that only 10% of the 10 to 5% of the population are banking with banks, the rest are not even within the banking industry.
That's true. That's true.
As well, know. So we are in a virgin market that we still have a lot of potential.
Totally agree. Thank you. Thank you.